to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and as always, the main man of the hour, AJ Brown. Happy Friday,
Hey.
AJ.
Hey, Sip. Hey, everybody. Happy Friday to all of you. Long
Friday
weekend
the
ahead.
13th. Friday
Oh
the
my
13th.
gosh. Scary day. I'm all excited though, because on Monday we've got a trader's holiday, Martin Luther King Day.
Yeah, how do you celebrate Martin Luther King Day? How's one supposed to celebrate Martin Luther King? Taking the day off, right?
I taking the day off and just relaxing a little bit, being thankful, I guess.
Yeah, so that means that we're probably going to be getting some movement today, right? Usually now that we're back from the holidays, traders are back in front of their desks.
Morning session. But then usually I think when there's a long weekend, folks check out, right? They check out a little bit in the afternoon. We'll see.
Unless you're tired of checking out because of all the holiday season. But from what I looked at this morning, we've got some action. We've got some movement in the market, primarily yesterday off of the CPI number. And today, I think we're just what data did we have hit today? I didn't get a chance to.
No data really, except for a lot of earnings are being reported in the banking sector. So remember, everybody, that the Fed has been, there's this chain of events happening. The Federal Reserve has been selling bonds at a pretty aggressive pace. So that's making bond values go up pretty dramatically. And so that actually makes a whole bunch of investor money go towards bonds. And what that's doing on that side is it's kind of playing around with how well banks make money on mortgages and things like that. But the Federal Reserve has also, on a separate tool of theirs, raised interest rates, and that affects all of us. And because of that increase in interest rates, banks are doing well with other products. In fact, according to the earnings, Bank of America, JP Morgan Chase, they're not doing bad at all. They're doing quite well.
And so we take that as a positive in that could lead the market higher. Or I know that the past couple of weeks we've been saying that we're about to hit a storm of some sort because we got all these interest rate hikes, credit card usage, savings are dwindling. I feel like we're getting some optimism here in the market.
I mean, I think market traders are forever optimistic, but I mean, we also got a little hint from the Boston Federal Reserve manager earlier in the week, and this drove a lot of positive sentiment. In fact, I have up on my screen here the CME FedWatch tool. This is a tool where they give kind of a sentiment of investors of what's going to happen in the next Fed meeting. So right now, the Federal Reserve's borrowing rate is around 4.25% to 4.5%. And as you can see here, as of right this minute, almost 95% of investors participating in this tool think that they're only going to raise a 0.25 point at the end of January. It's at the end of January is when the meeting starts. February 1 is when the meeting culminates. And so people are thinking that it's a 0.25 point rate hike based on a lot of the hints that were given by this Federal Reserve manager of Boston. And so they've done those record 0.75 point rate hikes, one right after each other. And now they're going to pull back the throttle a little bit. By no means do they have inflation under control. I mean, you look at the CPI index that was reported yesterday, and yes, it's moderating, but it's nowhere near that 2% target. But I think the Fed is trying as hard as they can to come in for that soft landing. So they bang, 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 hit us with interest rates, but now they're going to slow it down. They still have to continue to raise rates until they get it, but they're trying to slow us down. Most economists believe that around Q2, Q3, and there's actually no evidence beside investor positivity and optimism, there's probably still going to be a slight recession until things balance out. So quarter two, quarter three, that slowdown is still on the radar for everyone.
Yeah, depending on whose definition of recession you're going with, because that keeps getting thrown around. But looking at the CPI numbers, can we dig in real quick just to get like an overview of how it's
Absolutely.
settling down?
Absolutely. So consumer price index, this is retail inflation or a measure of retail inflation. So as you can see here, the that includes everything, including very volatile energy prices, like the fuel at the gas, the fuel that you pay to, if you're especially in the New England where you buy heating oil for the winter, that is in that number. And so is the food at the grocery store. And so you can see that's moderated. They expected 6.6%. You can see over here that it was 7.1% last time we reported on it. It came in at 6.5%. So that gives people some positivity that what the Fed's been doing has been working at slowing things down. But slowing things down would almost be a negative number. So all it's doing is slowing the acceleration. It means that your foot is still on the gas pedal, just not as much. And when you factor out the more volatile food and energy, because so many factors affect the price of food, affect the price of energy, so they like to pull that out. Look, you're still seeing moderation. You're seeing that we were at 6%. We were really pressed down on that gas pedal. Now we've pulled back to about 5.7%. It still means we're pushing that gas pedal, and the Fed wants us to really get our foot off the gas pedal for a hot minute and let things moderate. But it's making investors positive, as you can see here in our chart.
Yeah, yesterday seemed like a strong move following that news, and even today it seems like we had a little bit of a dip, and the buyers are coming back in. So
you never know what's going to happen during amateur hour. Amateur hour is that first hour of trading, and you never know. But as soon as cool minds start to settle in for the rest of the day, you get to see what the real sentiment of the day is.
And now that we're out past the holidays, right? Like that little midsection there where the V's connecting, that consolidation was like, basically Christmas. So now that we're out of it, some of these price movements can start to have a little bit more of an impact. And your sentiment is that we're still gonna reverse and come back down, right? I think we've covered that a few times.
Well, so let's cover it. If you're going by a strict technician's kind of retracement analysis, check this out. We were expecting, if we were going to follow the trend that started, let's see, what date was that? I think it was the beginning of December. December 7th is when we started to see that trend of a little bit of a downturn. If we were going to stick with that ideal sentiment, we would have reversed, like we said last week, before about 3,930. But in the last 3 days, we've popped up. In fact, we almost got to a point where we were going to be questioning whether we were on a range contraction phase of a downtrend or if we were actually going for a range expansion phase of an uptrend. So we're watching this level, this 100% retracement level around $4,020. We're watching that carefully, although this kind of calm that's coming today, we'll see what happens next week. We'll see if we do turn down, but we've already passed where we would call this an ideal downtrend. If anything, it's this fledgling downtrend is now under pressure. If anything, for us option traders who love sideways choppy patterns, because for option traders, that creates one of the most safest trading environments. I know it sounds counterproductive because most traders are looking for uptrends or downtrends. We like sideways choppy because that can create for us income streams when we sell our premium and lock in rates. And so this is actually good news for option traders. It may be a stall. It may be a sign of confusion or uncertainty of what's happening in the investor world. But for options trader, it means premium central, baby.
And so how's that looking on the VIX side of things? Because that is a tool that helps
Mhm.
gauge that sentiment. I'm assuming we're starting to get a little bit more volume now.
I mean, the VIX is telling us that people are calm. The VIX is telling us that, hey, there's a lot less of confusion or uncertainty about what's happening in the world. Things are opening up. I think that there's going to be maybe a couple more wrenches in the works now that China's coming back online, because China is a big player and they've basically been offline for a while. So I think that's going to stir up and create confusion. It's like we've got an 8-cylinder engine and only 6 cylinders have been working. So when you start to kick in those last 2 cylinders, you're going to have some jostling until you figure out how to keep the engine tuned again. So that might create some issues. And also, we're always watching what's happening in the Ukraine and Russia skirmish that's happening. But otherwise, things are starting to become stabilized, right? Stores are able to project inventory. Things are starting to root. And what you can see here in the VIX is just a general calm is coming. That's not good or bad for options trader. We just have to take that into consideration.
All right. So exciting stuff. Just want to remind anybody that's watching or listening for the very first time that AJ's been doing this for a very long time. He's been teaching people how to trade, specifically using options,
Gosh,
and
20
we've got
years.
almost, I think, 20 this year. So we may have to
Yeah,
do something special there with that reunion.
coming in
Um,
August.
and so he's put together a really nice webinar where he breaks down these strategies. I think he recently just updated it with some new
New examples.
current examples, which I know you do fairly frequently. So I'm going to go ahead and throw the link to that in the chat. If you haven't checked it out, go ahead and sign up. We've got a lot to talk about on the show. We've got a special guest. We've got AJ's pick of the week. We've got our speed round. If anybody's watching and has a ticker that you want him to review, feel free to throw that into the chat. We'll see if we have time. We're going to take a quick break, and then we're going to come back and talk about the IRS. We're going to talk about taxes.
Let's
It's that
do it.
time of the year. So we'll be right back, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Damn, I love tooling around in the Tesla. Oof.
Well, Tesla's been having some problems lately, which we probably don't need to discuss, but that's
No.
it's a wonderful product, but investors are not happy.
But let's talk about the U.S. House of Representatives, the
Yeah.
new Congress coming in, and the first thing that they've been thinking about doing is gutting the IRS.
Well, even before that, there was all this
Yeah.
hoopla about getting the Speaker of the House. There was like
Yeah.
13 votes. It was like very confusing. But as soon as that guy won, McCarthy, right?
Yeah.
The first thing he said was, "I'm putting this bill out to delete the IRS and the 87,000," right? And like now that's back in limbo. And so, what are your thoughts on that?
I mean, it's for me. First of all the stuff that's been happening is just, despite the fact that it's somewhat disappointing on one level. I mean, it's more interesting in my mind than like some of the Netflix series that my wife and I have been binging. So that's kind of fun. But as far as what they do, I mean, it's a moving goalpost. It always is anyway, but now the goalpost is not just moving a little bit left or a little bit right, but it's maybe moving to another stadium. And so I just want to know what's the outcome going to be and how's it going to affect me, right? Because when we're trading, right, investors have their own, rules that they have to follow, and it would be helpful to know what those rules are. So that's kind of where I'm at.
Yeah, I like to consider myself a fairly intelligent guy, right? I studied finance. I can do some basic accounting, but I've always been super confused by IRS rules, dealing with the IRS, how old school they are, how everything's still like they do things in the 80s, and it's frustrating as a millennial, and then even more so as a trader when you have different accounts and different margin levels and this and that. And so I'd love to have somebody kind of give us some guidance here. And I think that's who our special guest is.
We better introduce Jerry right now, because we should get his 2 cents on this exact topic of what does it mean what the Fed's doing, and what about us traders?
So let's bring Jerry Allison on. Jerry is the founder, the top guru over at Traders Accounting. And so, Jerry, I guess help us and help the viewers understand a little bit your perspective of the IRS taxing, trading, and then we can maybe talk about how some of our viewers can get involved with you because you are the expert.
Well, thank you, gentlemen. It's great to be here with you all. Actually, just as a correction, I'm not the owner. I'm just the tax accountant with Traders Accounting. So
the main guru.
That's right.
My apologies.
That's all right. Raven Johnson's the owner, and I don't want her getting upset at me, or else I won't have a job anymore. But anyway, let's talk about what's going on. I think you guys have mentioned the 2 bills from Congress that have come out. First of all, getting rid of the funding for the 87,000 IRS agents, and then coming out and eliminating the IRS altogether. Nobody ever expected those bills to go anywhere, but they are.
Could they? I mean, maybe they can pass the House, but would they even pass the Senate or anything like that? Or is this just kind of like putting our opinion out there?
I think there's 2 things going on. One is for optics. One, to show that right now the Republicans are serious about getting a rein on the IRS, because it never has had a good reputation. And second of all, I think it's a forecasting of what they're going to push for in the future. You got to remember your basic civics, that every spending bill for the United States government has to start in the House, which is now under the control of these people. So let's take the 87,000 agents. We'll see how serious they are about this by when, let's say, the budget is submitted on February 1st, and the Republicans in the House say, hey, we're not going to get this line item until, because these are now becoming bargaining chips. It's floating the ideas out there, and it depends on how tough they're going to be about this, because I think personally that if they stick to their guns and do not fund the government, they could possibly succeed in eliminating the IRS and restructuring the entire tax system.
1987, right?
That's right. Possibly even worse, or not worse, but I mean, I don't want to put any connotation on it, but it could be vastly different. So I think what you're seeing out of Congress right now in general, they're floating a lot of stuff that doesn't have a prayer to pass, because Biden said yesterday he wasn't going to pass the bill about, or wasn't going to eliminating the IRS. But once you start dealing with bargaining, anything can happen. So it's going to be a few weeks.
So now that affects us traders, and one of the things I've always questioned with Jerry, because I've worked with Traders Accounting for years now, and as investors, we want to be able to keep as much of our profits that we figured out how to earn as possible. Is being an individual okay, or should I put in the extra effort, especially with what's coming down, possibly down the pike? I mean, how do I navigate all this?
Right. And I know the stuff coming down in the future, we have to keep an eye on it, but we can't plan with it right now because it hasn't been passed. But I read an article that talked about a study by Syracuse University lately. And it said it was dealt with the IRS. And if you remember back when they talked about, they passed the funding for the original 87,000 agents.
Right.
They said, well, these are going to be devoted to auditing big corporations and multimillionaires and things like that.
And billionaires.
Well, the study Yeah, the study from Syracuse University said that this isn't the case. The IRS is going after the low-hanging fruit, average taxpayers. And the reason for it is it makes perfect business sense. And I've been telling my clients this for months, actually, is that you're not going to go after, let's say, a multi-million-dollar or billion-dollar corporation that has tons of lawyers that can tie this thing up for years, because that's not cost-effective for the IRS. You're going to go after people who you assess them $1,000, $2,000. They can't afford an attorney, so they're just going to pay it. And so it's easier to take an hour or two IRS agent's time, make those assessments, get that money, and move on to somebody else.
Yeah. Yeah. Convenience, right?
Yep, absolutely.
So then what do we do?
Right now, this is where we were going with it. And I lost track of my thought. Actually, there's a way to avoid this, because as I just mentioned, the Syracuse University seems to imply that auditors are going after individuals. So you can use an entity where if it gets it off your personal tax return, you become much less auditable in that case. And in certain cases, your personal return becomes almost audit proof. For right now, an investor who is they've got a W-2 job and they're taking off trading expenses on their Schedule C. Well, that Schedule C is the target. And so, and the IRS doesn't think you can have two full-time jobs for whatever reason. It's absurd, but they don't like going down that road. So what happens if we form an entity, we get all that stuff off their personal tax return, let's say into an S corporation or partnership. It still flows back to the personal return, but it does so on the Schedule E. Now, here's where I'm going, is that W-2 has already been submitted to the IRS. They know what that is because that comes from the employer. The K-1s from the partnership or from the S corporation have already been submitted to the IRS. Your personal return almost becomes ironclad at that point because everything's been reported to the IRS. What are they going to gripe about? If they're going to have a complaint, they have to go back to the original companies that issued the documents, but they can't come back to you.
Okay, so what you're basically saying is the IRS probably has some sort of notification, right? That if you're a W-2 wage earner and you've got your Schedule C, you're already a target. You've got a bullseye right on your back. And so what you're saying is let's take the Schedule C and let's leave it blank. Let's not even give them a chance to put that bullseye on us. We'll keep our W-2 income, and then we'll go ahead and do our trading in this entity, and it'll flow in all legit through a Schedule E, which won't raise alarm bells.
Absolutely. And it's
that's brilliant.
It doesn't even involve the W-2. If you put a Schedule C on your tax return,
no matter what,
it's like rolling craps. Eventually, you might roll snake eyes. And I've talked to a lot of clients. They say, hey, I can justify everything that I've done on my tax return. Great. You may have an ironclad tax return. You can prove everything. But can you take 10 to 20 hours out to defend it? Because time is money, as you guys know. And so, digging all that stuff up, making sure that it goes to the auditor, make sure the auditor understands it. And quite frankly, that's another issue with the IRS, is getting auditors that actually know what they're doing. So it's crazy. So we're going to be dealing with some of this in the webinar on Sunday. I wanted to mention that more extensively, but I think it's very important that we traders particularly consider setting up some type of what I call an off individual tax return entity. It gets it off your personal return.
It's so easy to start trading just as an individual. I give my broker my social security number and I'm off to the races. Is it I would imagine setting up an entity, and I'm actually kind of doing this hypothetically because, Traders Accounting set up my trading entity over 15 years ago. So I know that but is it that, is the setup and the effort that I put up in advance, is it worth it? Should I have my trading portfolio at a certain rate before it's worth it? Or should I just do it right out?
That's a great question. And yes, it is much easier to start as an individual because you're right. Just give them the broker your social security number, put in the money and start trading. The issue is when you start wanting to deduct expenses. And the
Okay.
moment that goes on your tax return or becomes an issue with you, then you may start drawing some attention there. Matter of fact, one of the things that, and you mentioned, is it cost effective? One of the things that I'm going to cover on Sunday is that we can find a way for a certain amount to make the government actually pay for your LLC. Yeah.
Oh, well, okay. So that's a good kind of palate wetter because everybody, I
Mhm.
just want to let you know that we're having Jerry back for a special event. It's a webinar, it's a workshop. It's this Sunday, and it's this Sunday at 7 p.m. Eastern, 4 p.m. Pacific. If you're in one of those other time zones, just extrapolate. But and I believe Sip, did you go ahead and put the link up in the chat?
The link is in the chat. Here's a little rundown of what you guys are going to be talking about. So anybody that's interested in getting that deep dive, sign up, and Jerry will probably answer all your questions.
And he's going to be talking about way more than if it makes sense. We already know now, based on what he just said and what he hinted at, is not only does it make sense to start right from the get-go with an entity for trading rather than your personal self, but that you can actually get a lot of the expense involved with forming that entity. You can figure out a way to actually get the government to help subsidize that, if not cover it completely. So he's going to go into that detail, but he's also going to tell us all about all kinds of other things. You should definitely go to that link and register. And I would make a big push for you to be there live on Sunday, because we're going to open it up for Q&A at the end, and you can just get your questions answered right then and there. But if you can't make it, you should still register anyway, because then you'll get the replay and you can watch it on your own time. So definitely take a moment right this minute, click on that link that Sip just put into the message dialogue and register, because we're going to hear from Jerry like for a whole hour rather than just 10 minutes on Sunday.
Hey, Jerry, I have a quick question. This is now that since I have you on the line, I already have an entity that operates in a different industry. Would you advise using that to open an account, or would you segment? Would you create a whole different entity that's specific to just the trading?
That is a great question, and I deal with that question a lot. It depends on whether that entity has any type of a risk for being sued. Because what you don't want to do is you get sued, the person wins the suit, they've not only got access to your current stuff, but now they've got access to your
portfolios.
Yeah.
Shoot.
So we don't want that to happen.
That answers
happens a lot with rental real estate as well. So we got to make sure we guard against stuff like that.
And you mentioned that there's a way to create an LLC or a business entity in this format that is almost free, if not there's some credits or bonuses.
Not bonuses, but the refunds that you get from deducting those expenses. And we've got a couple of expenses that actually open up because you form a new LLC.
I got to be there on Sunday.
But it's not just any LLC, so be careful.
Yeah. All right. Well, Jerry, this is phenomenal. I think that a lot of our viewers, a lot of our members are going to appreciate the knowledge, the information. We appreciate you coming on and giving us a little bit of a glimpse. Like AJ said, the link to sign up is in the chat. We'll probably get it posted on social. We'll send it out to the email list. Everyone that's interested in learning more, please come. Jerry, thank you for your time.
My mouth is watering for Sunday evening.
It's just such exciting stuff, right? We want to save as much money and keep as much of that profit as we want. So appreciate it greatly.
All right,
Jerry, thanks for being here today.
All right, thanks, gentlemen. It was nice being with you.
My mind is blown, Sip. My mind is blown after talking to Jerry.
I mean, I had a few more questions. Like I probably could have kept that going for, another 30 minutes. But we'll save that for the webinar. Once again, the link is in the chat. And we've already got some questions coming in. So we'll guide everybody to that.
Yeah,
Moving
on. Mari, you want to join the entity? I think I know the answer to Mari's question, because California is a bear to do business in no matter what. But Jerry will answer those questions on Sunday. So if you can, just register for that webinar, and We're like I said, we've already planned to stay on the line after the webinar, after his whole presentation's done, and just we'll stay on the line until every question is answered to people's satisfaction.
Totally. All right, moving on with the show. We've got AJ's pick of the week coming up. We've got our speed round. But before we dive into all of that, I want to just remind everybody that we do have a free workshop where you can go and learn a lot of the strategies that AJ and the team are implementing. But if you need a little bit more custom coaching, a little bit more hand holding, if you want a little bit more attention in getting the right strategy for your portfolio, for your risk appetite, AJ's got a wonderful one-on-one coaching program. Want to give everybody an opportunity to come sign up, learn a little bit more about it. I'm going to go ahead and throw the link to this in the chat as well. I know that we were kind of limited in seating the last couple of weeks going into the new year. I'm hoping that we've got some availability, AJ.
Well, yes, except Justin is he's got he's at half capacity. So we've got maybe 3-4 more spots for people that we're going to handhold through this process over the next year. So if you want to, again, no obligation to talk to us about it. And it's as much a fit for us as it is for you. So when we talk to you, we're actually going to also be trying to figure out if you're the right person for us, because we want you to actually trade with us for a year. And our goal is whatever you spend on us, that we make it back for you and more while you're trading with us. So
I just threw the link in the chat. A lot of links today. We've got the free workshop, we got the tax seminar, and we've got one-on-one coaching. All right. So if you cannot ask us that we didn't provide you, or say that we didn't provide you with the resources to make some money, right? Make some money trading options. All right, let's move on to AJ's pick of the week. Today's pick of the week is, I think, one of the airlines that weathered the big drama over the holiday season with cancellations and stuff. I feel like JetBlue, ticker symbol JBLU, was one of the shining stars. And what does the stock say? What are the prices telling us?
Well, and there is earnings for JetBlue coming, so I almost want to plan for the trade, and then their earnings is scheduled for January 26th. I want to watch that carefully. In fact, there might be an earnings play here, so something completely different. But I'm going to talk about perhaps a premium selling play, because it does look like it's setting up. Remember, JetBlue had it was in the news a lot about 6 to 8 months ago, when there was that whole argument around Frontier and Spirit and who's going to take over what. And JetBlue, it wasn't a match, but JetBlue won every way. When it was in the news, I wasn't as actually interested, because I couldn't forecast what the everyday investor who pays attention to the mainstream media might do. But now that that's all behind us, the airlines in general, despite their fuel costs are very expensive, despite some of the logistics issues that we heard about with the FAA going down just this past week, they're making money, right? They're not only making money, but they're busy as all get out. And so airlines are still now my focus, and JetBlue specifically has always been a very well-run company. One of their focuses was, we're not going to get too diversified. We're going to go to only a couple of profitable destinations that are highly traveled. We're going to count on those other airlines to get you that last little piece, but we're going to do the most profitable flights, and we're going to keep our airline the planes, we're only going to buy the same sort of plane. So we only have to have the same sort of pilot and the same sort of mechanic. So they have a very well-run business. And when we look at their price of their symbol, you can see that they fall into the pattern that premium sellers love, which is this sideways kind of choppy pattern. And it looks as though, and the reason why I wanted to feature this, it looks as though they're forming a top. And again, I want to make sure that they form their top. I'm looking at my fast MACD, which is one of my favorite indicators. And I haven't had a fast MACD crossing, which means the fast MACD would cross over their 3-day EMA or their divergence line. That would give me the signal that indeed a reversal has been found. So I have a little bit of weight, but I wanted to feature it because I think that this day is coming, right after this Martin Luther King holiday. And in that case, I may be inclined, and what I'm asking you to research on your own, I may be inclined to do a quick kind of shorting of JetBlue stock. So that means I'd short the stock, or I have an alternative. The alternative would be to, instead of short the stock, buy a deep in the money, far out in time back month put option. That back month put option would act just like shorting the stock. And the benefit of using the put option is that it's a cash trade, not a margin trade. And I could see myself doing that transaction if a reversal down is found in the next few days, and then setting myself up to sell put premium every time a bottom is found. And again, I am a little bit concerned about this earnings on January 26th, but I may hedge this premium selling position, put in all the risk stops, plan out everything in advance, still do that trade, and then look to pile on a earnings play trade as we get even closer to the earnings date. But I really wanted to feature this because I've traded JetBlue on and off for the last 15 years. I think it's a great one to sell premium against, and it looks like the signal is pending.
Yeah, I just pulled up my Robinhood account to see what those deep in the money put options look like, and they're not too expensive.
Yeah.
So
I'm
I
talking
like that
about
setup.
probably going out as far as January 2024. And when you go deep in the money on a put option, it means going higher in the strike price. I'm looking over here just at some of my statistics. Maybe this $15, or even if I wanted to be, maybe the $15. I don't think that actually you could probably get by with using the $12. $12, $15 would be safer. Either the $12 or the $15 strike price all the way out in January 2024, and that would be a good substitute to shorting the stock. Cheaper too.
Good stock price too. So I like this call right here. We're definitely going to add this one to the watch list. All right, let's keep the party going. Moving on to our speed round. Okay. This is just some of the members or the viewers that have been asking certain names this week. As always, if you're watching and you have a ticker you want AJ to go over, feel free to throw it in the chat. Our first name is Brad from Rock Falls, Illinois, wants to know about the online education platform Udemy, ticker symbol UDMY.
Yes, we looked at this last evening, actually. Brad's part of our program, our premium selling program. And this is a fun symbol, right? It's doing exactly the pattern. Brad's been with us on and off for a while now. And so he knows that we look for, I'm showing you a year chart. We look for these ones that basically are stuck in a sideways channel. Other traders, stock traders, or even option traders that have just, they like to do just stock plays with leveraged options. They're going to turn this away. They're going to say that this chart is not tradable. I'll tell you that as a premium seller, this is exactly what we look for. These boring stocks stuck in this range. This one's stuck in a range between about $10 and $16, which is a great range to be stuck in. And so it looks like it is totally forming a bottom here. So in this case, Brad, I'd be getting ready. And I'm still well below the halfway mark between support and resistance. I'd be getting ready to either buy some Udemy stock, and I have to buy it in lots of 100. Remember, everything with options, I'm waving at. I see my wife and my little one over there. They're just making faces at me. I can see, for instance, buying that stock or buying a back month deep in the money, far out in time call option. So similar to what we were looking at with JetBlue, Okay, this is important. I'm pulling up the option chain, and I should have checked this in advance. One thing I'm noticing about Udemy is that there's not many people trading the options. So I was talking about how beautiful the pattern is, and the pattern is drop dead gorgeous. But looking over here at the August 2023, let me look at the May. Okay, the February options, I see some activity. I'm looking at open interest, but I'm also looking at the bid-ask spread. Do you guys notice, Sip, do you notice the bid-ask spread is just really large? Like, for instance, in the February options, if I look at the puts, the $10 put, the bid is 30 cents and the ask is 65 cents. For the 12.5 strike price, it's $1.50 versus 2.15. Yeah, it's a very large bid-ask spread. Do you see that?
Yeah, I mean, it's got to be a riskier options play, right?
It basically means that there's not a lot of people in the room buying and selling these things. And so that always is a red flag when it comes to doing any sort of option strategy, because you want to be able to go in there when you want and say, hey, I've got this option for sale. Who's going to buy it? And have a bidding war, right? You want to have people who are ready to buy your option. You don't want to go into an empty room and say, hey, I got this option for sale. And then, you have to take whatever the bidder is willing to pay you. So that's my red flag on Udemy. Let me at least look at the near-term option, the one that expires next week. Yeah, even that guy. So we'll have to watch this ticker symbol, because this ticker symbol is just the most beautiful premium selling pattern. The underlying symbol is the most beautiful pattern for option trading strategies. But man, there's nobody in the room buying and selling those options. So that kind of makes it a no-brainer. Brad, I appreciate you bringing that up so that we could emphasize how important liquidity is when you're going to be trading something.
Yeah, and sometimes that's just the case, right? There's plenty of other names with plenty of volume to find opportunities.
Don't get stuck on a symbol. Absolutely.
That's right. So thanks, Brad. Moving on to our next ticker. This is Neil from Edmonton, Alberta, and he's interested in Kinder Morgan, ticker symbol KMI.
Ooh, another really nice sideways. We like these sideways patterns. I also noticed Kinder Morgan. We're looking at a year-long chart, and I'm looking at these earnings. They make money, and we've been talking about that. The name of the game right now, especially with the Fed balancing everything in people's portfolios indirectly by just changing the rules of the game. If you're a company and you're not making money, you've got a target on your back. This company's making money. Not only are they making money, but they're giving a nice piece of that money back to investors in the form of dividends. Not a bad idea for a company. And that also means that despite the asset, right, investors are not pissed off, because if they own this stock, they're getting paid in fact, it's a very healthy dividend. 30 cents per share, 27.8 cents per share is not bad for a stock share that only costs $18. So investors are getting paid a nice dividend, and so they're not actually pushing the company to have a ton of asset appreciation. That is great for us premium sellers, because we want it to stay sideways as long as possible. Now, let me not get caught into the same problem that I got caught into with Udemy, because we got to make sure that the options chain has excitement for us. Now here's a contrast, right? This thing, the bid-ask spread is a penny to 2 pennies. The open interest, which shows how many contracts are out there, is in the thousands. So here's a case where you could go into the room and it's standing room only. And if you say, I want to buy something, you'll have a bunch of people jump to you and they'll be bidding, who will give me the lowest price. And if you want to sell something and you go in there and you raise your hand, I want to sell this, you'll have a whole bunch of people, begging to buy that from you. So This is a case where this actually does support us doing some hefty training. So if you wanted to substitute, even the substitute options, which are usually less popular out in January 2024, I mean, look, they have an 8-cent bid-ask spread, and there's thousands. I'm looking at the at-the-money options, thousands of open interest. So this on the contrast to Udemy is a wonderful play. You could trade options. You could make this symbol do backflips as far as profiting in your portfolio, which backflips in my mind is a positive thing, because I do the circus stuff on the side. So I like anything that does backflips. So yeah. Okay. So specifically right now, it looks like Kinder Morgan could be giving us a signal any day, just like JetBlue, that a top is found. So I would say, yeah, let's get ready to either short this stock in lots of 100 shares or buy those back month deep in the money, far out in time put options. That's the initial covering position that we would have so that we can then start selling premium and collecting profits on that premium. Yeah. In fact, this one was not on my radar. It's on my radar now.
Yeah, that volume is crazy in the options market. So thank you, Neil. Moving on to our third ticker. This is Gail from Alameda, California. Interested in a company I'm not familiar with, Marqeta, ticker symbol MQ. Have you heard of this one?
Yeah. They're trying to compete against Stripe, PayPal, Venmo. They're a merchant account basically. Yeah, okay. And it's funny that it's from Alameda, California. I think this company is based in Oakland, California, which is right next to Alameda, California. So, and kind of, again, we're seeing all sorts of contrasts. This is a new kind of merchant account, a way for merchants to take money from you in return for product. And you can see that they are new. They haven't quite figured out how to run this game yet. They're not quite making a profit. They're not losing as bad as a lot of the tech companies out there, but they haven't figured out their equation yet, at least with respect to cash flowing positive. Yeah, I'm looking back at the last 4 earnings, and they keep losing a little bit of money. That's not going to make investors very happy right now. But in the meantime, for us premium sellers, I want you to notice that, yes, we're in a channel, and it's got an ever so slightly downward trend. So if I come from about here and run my best fit trend line, you can see that this line is moving ever so slightly down. So we can still sell premium against this, but also our initial covering position, the position that makes it possible for us to sell premium, we need to make sure that it is aligned with this slight downward trend. And it's not, it's lost about 50 cents to $1 over the last 5 months. So we need to make sure we set up that initial covering position such that when we finally get out of it, when we're done selling premium against this, that it too will profit. So that means we want to be shorting for our initial covering position. We either want to be shorting MQ, so we want to be selling so that when we buy it back at a lower price, we'll make profit on it, or we can substitute that shorted stock with a back month deep in the money, far out in time put option, which will also profit in the long term as this thing slowly goes down. And that needs to be timed with a top reversal. And it just so happens that looks like what we're forming. Now, again, I don't want to get too ahead of myself. I want to make sure that there are options to trade on this thing. And actually, yes, this one, yeah, okay. I'm looking at the option that expires next Friday. Maybe I'll look at the one that expires in February. Bid-ask spread, something like 10 cents, not bad. 10 cents on this side, that's not bad. Looking at an option that we might use as a protective option, 15-cent bid. So yes, it's not as much activity as we saw on JetBlue or as we saw on Kinder Morgan, but there is activity. You'd walk into that room ready to do some transactions, and you wouldn't maybe have the biggest bidding war, but you'd have people who would do the transaction with you rather than you just sitting there waving your hand hoping somebody will buy or sell from you. So that's a good sign. There's options that can be used as substitutes. So yeah, the key behind this one, the one that makes this special, is you want to make sure that your initial covering position is going to be making money as the underlying symbol is slowly decaying in price. So that means shorting the stock or buying the put option. And that needs to be done at a top reversal. And it just so happens, and that's probably why we went ahead or why somebody submitted this one, is because it looks like a top reversal is forming. And so, yeah. And just know that because you're going to be making more money on the back end from the initial position, that those incomes that come periodically as you sell premium will be a little bit on the less. It balances itself out. This is kind of a hybrid of a directional trade and a premium trade, but it can be done.
It's also just another lovely price point. I mean, we've had really good price stocks today, and I had to research the company a little bit because I've never heard of it. But scrolling through their site, they have one of the slickest websites I've ever seen. So I'm just surprised that I've never heard of this company, but it seems like they do good business with some big names out there. So I'll definitely keep an eye on Marqeta. So thank you, Gail from Alameda, California. All right. Well, we've had quite the show today. Things people are back in front of their screens. There's a lot of opportunities in the market. If anybody's interested in learning more about AJ and Trading Trainer, we've gone ahead and thrown all the links into the chat. He's got the tax strategy webinar this Sunday, so feel free to head to that to learn more about taxing and trading. I honestly have been very unknown in that area for quite some time, so I'm looking forward to learning more, specifically because I have a business and I do trade and I want to save money. So I encourage everybody to join us there. We've got a holiday on Monday. Otherwise, AJ, what are we looking for? Midweek, right? Mid-January, first month of the year. How should we be positioning ourselves?
Well, I think so. Based on what the broad market is doing, listen, the broad market is going sideways choppy. I mean, that's just where it looks like it is. It's a lot of people it's calm, meaning that people are not as uptight as they were just even in October and November. They kind of know what's happening, but at the same time, nobody's ready to start a big selling spree or a big buying spree, at least not right now. This is great for premium traders, but what's important for us is we have to evaluate each position on its own. We can't make blanket statements and say we should be trading premium selling positions only with covered calls or bull call diagonal debit spreads, or bear, shorting stock or bear put diagonal debit spreads, covered puts. You can't make that blanket statement. Each symbol has to be looked at its own, and a strategy for each individual symbol has to be figured out. So I'm going to be spending this long weekend kind of planning my January trades, and going all the way now. We're already thinking about the February expiration. So I'm going to be thinking about that. But the other thing I'm going to think about, and I think we'll feature it next week, so this is a palate wetter for you guys to be here next week. We'll talk about some earnings plays. I'll plan out some earnings plays and how to take advantage of earnings, because earnings can be very tricky, but they can also be, with options, just made into a moneymaker where you don't have to put any risk on the table. And I'll talk about that next week.
I like the sound of that because I've been seeing and reading a lot about the upcoming earnings and how that can sway the market. So looking forward to that. If you've enjoyed the broadcast and you're not following us, hit that like, hit that follow, smash that subscribe button.
Put us over 1,000, would you? I'm looking right now at our YouTube channel. I need you to tell your friends to subscribe to that. I'd really like to get us, as you can see right here, I'll zoom in on it. We got 697 subscribers. If we could get ourselves over 1,000, and you guys are the ones that can help, it's going to mean so much, because that means that YouTube will reclassify us and put us in front of other people's eyes, and that's always a good thing. So if you've got some friends, just tell them, subscribe to our channel, and they may enjoy something from us, and put us over the edge. Thank you.
Yeah, and we're pretty consistent with the videos, usually 3 to 4 new videos a week, smaller clips, with definitely the show. And as always, we do read the comments and all that. So if there's specific questions, you could always throw it in there to specific names, and someone will get back to you. But hit that like, hit that follow, hit that subscribe button.
See you
AJ,
Sunday.
I appreciate the time. Big thanks to Jerry for coming on the show. Once again, the link to that is in the chat. Otherwise, we appreciate all of you tuning in, and we'll catch you guys next week.
Bye-bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.